depending on your account size. Guys, do you know that just with a small account size, you can make above $100 just in one single trade? In today's video, I'm going to show you a strategy in which you can place a trade with a very low risk, and then you allow the trade to run for long. Then you lock your profits while the trade run. So this is an example of a trade that I was able to predict. It was right up here, and I predicted that price was going to move just exactly as this, and that's exactly what happened. So you can see these are screenshots of the trade I took, guys. I was able to predict price to move this way, and I even gave the signal in my VIP group. Right from up here, it came down, and then I predicted that it was going to move up and then come down, reach this trend line, and then it goes back up. Now it's retesting, and that's exactly what happened, guys. You can see this is where price moved down, and then it reached here. You can see from here, I predicted that it was going to move up, and that's exactly what it did. So from here, you can see how it moved up, and then you can see this is the trade. This is where we currently are. Came down here, and that's how we got the rejection. Price move up just the way I predicted. So predicting that it will equally move this way. So with this kind of set, I will show you how to be able to do this prediction and catch big moves so that you can grow that small account. Hello traders, welcome back to my YouTube channel. In today's video, I'm going to be showing you how to do analysis, how to be able to predict the direction of the market accurately and catch big moves that can help you grow even small account sizes. So I went to bigger time frame like I always analyze, and then I realized that price was in an uptrend. So you can see price, it was in an uptrend, forming higher highs and higher lows. That is the bigger time frame, which is the H4. So you see that whenever price makes pulls up, it always moves back. When it pulls up, which is known as a push face, it always retraces. All right. So sometimes I use my trend lines to be able to determine these pullbacks, and I combine them with support and resistance zones. All right. So up here now, I was able to identify this supply zone here. All right. Price, I was able to identify the supply zone, and what happened is that I drew it out. I sketched out the zone with this light blue color. Okay, so price was still around here, and I was actually waiting for price to move up. So when price came up, it got rejected. It came back and then tested this zone and got rejected. So I knew that price was still going to retest this zone. So it went up. Now you see that the zone which is coinciding with the moving trend line, all right, the upward trend line, was a strong supply zone. So when price came up now, I knew that it was going to move down. That's why you see this arrow like this. I predicted, because the zone was a supply zone. I just sketched out the zone as a whole. That is why you can see that it's white. The blue, this area is a white zone that was sketched in a bigger time frame. Sometimes price will enter into this zone, and and people will be thinking that price has already broken through the zone, and all of a sudden they start buying, and you see price move down. So that's why when I go to higher time frame, one of the secrets is that I sketch it as a whole zone. I just occupy the whole zone. If price don't break through the zone as a whole and close outside here or comes back to retest, I'm not going to consider a buy. So from the smaller time frame now, I was waiting for my rejection candle. All right, so if you go to the 15 minutes time frame, this is the zone that we are talking about here. All right, you can see a candlestick pattern. This candlestick pattern, you can see these three candles. They are known as what? The evening star. We call the candlestick pattern the evening star. When you see three candlesticks like this, you see this blue candle, and then it forms this rejection, and you see a bearish engulfing candle. So these three candlestick patterns make up what we call an evening star, which is bearish reversal candlestick pattern. All right, so from this knowledge now, I already knew that price was in a strong zone, and given my two confluences, the rising trend line and the supply zone, I considered that it was going to be a sell trade. All right, and I knew that it was a swing trade that was going to sell for long. Now, how can you grow a small account from this? Now, if you see this pattern, we have done our analysis in the bigger time frame. All right, so in the bigger time frame, quite all right, we see our rejection. You can see go down to smaller time frame like 15 minutes. You have a small account size. All right, so that your stop loss should not be wide. You look for candlestick pattern. Sometimes it could be double top, patterns, double bottom, and all of that if it is in a downtrend. So now here you enter here, guys. All right, you place your stop loss because you remember that price has hit the uppermost part of this pattern of this supply zone. So now you place your stop loss just above. You see that your stop loss is not going to be wide, and given that I've already realized that price comes back and then retests here. When it goes, it comes back and retests, it goes, it comes back and retests. So I knew now that there is a high possibility of price moving from here right down to this zone here. And guys, this is money, this is real money from here for days. This is the 4 hours time frame. What you do is, with a small account size, is that when you enter, you wait for trades to move. All right, when it moves, and then you see it creates a lower low. You see that price will now start forming lower lows and lower highs, lower lows and lower highs, lower lows and lower highs. When price start moving, it creates a lower high, it comes back, it creates a lower low, it comes down, it breaks the lower high. Now you move your stop loss, you place above the lower high. All right, so it moves again. If price move, it creates a new lower low, it comes back, it start going, you move your stop loss, you bring it down, you shift it down here. All right, when it continues, it moves again. You see that it breaks, it creates a new lower low, and then when it creates a new lower low. Now you see that it has created a high, you move your stop loss, you place above the high, and that's how you continue locking your profits until when you see price make it down here, you have placed your final take profit here. As you are locking your trades, you are locking them such, knowing that even if price reverses back, already secure much profit, because from here you are going to see that price just from moving from here to here, that's much money. All right, and we are looking at profits. Avoid making it to be too tight, because when you make it too tight, you bring your stop loss very close to price, it might reverse a little bit and then hit your stop loss and continue. So you make sure that you allow price to create a lower high, and then you come and place your stop loss, you move your stop loss, you place above it, it breaks, it creates a new lower low, it creates a newer high, and then when it comes, you move your stop loss, you place above it. Until guys, from there, from here to here, even with a small loss size, guys, you can make even $100. All right, just imagine the risk. You just risked a little part of your account. From here, if the price happen to move against you and reach the zone up here, that would have just been a few dollars. But look at the risk to reward ratio. All right, that's one of the ways in which you can grow your account powerfully, guys. You can grow your account through this way powerfully. Okay, now you see what happened here again is price now moved and then it reached down here. Okay, price has reached the zone down here. Now you see that, okay, there's a high probability of price now continuing the trend, given that price has reversed to this zone. All right, remember in the other videos I showed you guys how to identify this demand and supply zones. You can see this zone, I sketched it out because price have been reacting to this zone for a while. All right, guys, follow up. This strategy can be used in any market. In forex market, it can be used in trading indices, in volatility 75, and whatever thing you are trading. This is a powerful price action strategy. So you see now that you identify that this zone is a demand zone now. All right, because price is now above it, and after you identify it, now you connect your trend line. You have connected the two lows, this low, you have connected this low, and you have connected these two lows. And we know that from our strategies, when price comes back and hit the third time, there's always a high probability of price respecting the zone. Now you see that we have two confluences. We have this this demand zone here, plus the rising trend line. So now you have taken your profits here, guys. You have taken your profit, so you have grown your account already to a very good amount. All right, so now you are now ready to enter again. So you see that price come here, you see what happened. We saw a rejection candle and it hit the lowermost part of this trend line again. You can see a rejection candle with a long wick. Here you take your order, you go now for a buy order, you place your stop loss below here. All right, you place your stop loss below here. You can still target right up to this zone, guys. All right, even though sometimes they don't have to be greedy. All right, you just have to take what you take in the market and go out, because there's a high probability of price moving up right here. So you can see now that after price came, this was demand zone that price created here. So price has broken through. Now you see that price has come now after reacting to this strong demand zone around here. Price has gone up now. All right, it has gone up now and hit the zone. So you see rejection candle. Now what happened is that price is going to reverse a little. So we are considering this now to be a reversal, because we are believing that price is now gathering momentum to continue its trend. All right, which is the stronger trend in the bigger time frame. All right, which is the stronger trend in the bigger time frame, you can see, which is a bullish trend. Now you see that price has reacted to this zone here. There's a possibility of price now retesting. Price could still come back right down here and retest, and then before it finally comes back to break this zone and move right up. All right, so in this situation now, if you had entered down here, all right, see that we have to close some trades. Okay, now because we have to secure some trades, now wait for price in this situation now to come back and then retest for us to go long. If we are going long now, we will now be targeting somewhere above, because price will likely be breaking through this zone. Otherwise, if price don't happen to break through this zone, then it finally happens to break through this strong demand zone down here, there will be a serious selling. See how it's easy to enter. When you are entering those type of trades, you make sure that you ensure that price hit the lowermost or the toppermost part of a particular zone, so that your stop loss is not wide. All right, even with a small account size, you'll be able to catch very big trend, and you have to be patient, guys. When you place your trade, don't be afraid. When you see it reversing, don't be afraid. You lock your profits, you move your stop loss to entry price, and you are not afraid. All right, even if it comes back and hit your stop loss, fine, you are going to look for another opportunity. So you just have to have the knowledge. When you have the knowledge, the money will follow. So you just have to maintain some patience. If it happens that price is unable to break the zone here, that it happens to break through this zone down, then it's still fine, guys. We are traders. Buying or selling, we still make profit. So we wait for price to break through, and then we'll now wait for it to come and retest, and then we'll start selling aggressively. Let's take a recap. You go to a bigger time frame, you do your analysis, you see the bigger time view. What is the trend of the market? All right, so you try to identify the zones, the supply and the demand zones. All right, because with the combination of these zones, and then with our market structure, we are going to be able to predetermine the direction of the market. So after we identify those zones, now we drop to smaller time frames. All right, if you have a small account size, we ensure that price move to our zones clearly, that we see that price is clearly in our zone before we enter. Because in some situation, traders just see price react a little bit here, we see a rejection candle, they just jump in and sell, then they place their stop loss just up here. Price will make as if it's going down, go up, hit their stop losses, and then continue in that direction. I know many of you are right now, you are smiling, you are bearing weakness with me that has happened to you. Price hit your stop loss and continued in your direction. So that is trading, guys. So that is how you allow price to hit the uppermost part, and then you enter, knowing that even if it moves against you, you are going to incur a very small loss. And that's how it is in the long run. You see that you are going to be very profitable. So that is how it is, guys. Thank you for watching. Please, if you are new to this channel, just click on that subscribe button, click on the notification bell, like, give me a thumbs up. Make sure you click that notification bell, so that whenever we post a new video, you are going to get notified. Thank you for watching. See you in the next video.